Wonderful. Good afternoon, ladies and gentlemen. Nice to meet you again on this Wednesday afternoon, one day before Christmas Eve. And I'm really happy that we can spend this afternoon together. I hope you can hear me and see me and you have a picture so we can start into this wonderful topic. Today, we're going to talk why you should trade major currencies and what are major currencies basically. We have to talk about the following topics today: understanding the major currencies. Darius, thank you very much. In Forex trading, how to read them properly. And we want to talk about liquidity in the trading major Forex currency pairs. Then we want to talk about the cons and benefits of these pairs and if they are a really good place to start. I hope you can make sure that you stay until the end of this webinar when I will show you why Forex is a really, really good place to start with trading. Maybe if you join us to the first time, this is me. I'm Markus Gabel. I'm a German trader, and I try to speak English to explain you the deeper knowledge of trading. And I do it for more than 20 years right now. And I have my own trading service. It's a mentor and education service, How Trading. And beside, I'm a trader at the asset management Born, Stahlberg and Partner. We have 3 branches, Germany. I'm the head of trading in Germany. And we have the headquarters in Switzerland, in Zurich, and we have a special branch in Tokyo, in Japan. And if you want to have more information, then visit my homepage, tradingandpersonality.com. You will find it. Where is it? Let's see. Oh, got it. Okay, here we go. There is. That's trading homepage, tradingpersonality.com. If you have any question, if you want to book your own trading free counseling interview with me to find out, maybe I can help you in trading, then click on this button. And all my webinars, all these interviews will take place by Zoom call. Okay. So in this webinar series, I'm partnering Trading Spotlight. I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5. And finally, if you're watching this on YouTube, maybe later, then remember to like this video, share it with other traders, and subscribe so you will never miss an episode. So Wednesday afternoon, it's Marcus time, and maybe you know me a little bit better since the last week. Then I will try to explain you trading from a special point of view, because I work with karmic principles, and I believe that if we do something good for other people, it will come back to us very, very much bigger. And this is what I always try to say: plant the good seeds and they will ripen up and it will everything fine for you. Therefore, I share all my knowledge with you because I'm absolutely sure and I'm convinced that you can become successful in trading if you follow the rules. This is the most important thing. Okay, today we want to talk about the special Forex market and the so-called major currencies. And they are known as major currencies because that's the most popular traded currencies. But before we look at which are the major major Forex currency pairs are, we need to look at what a currency pair actually and basically is. Oh, and by the way, if you have any questions, that chat box is open, I can see. And if you have any question, type it in so we can, we can talk about everything. There are no secrets in trading. Oh, yeah, there's one secret. The biggest secret in trading is there isn't any secret. There isn't at all a secret. The Holy Grail is deep in yourself. You are the Holy Grail. This is maybe Harry Potter, this is You know, this is the wizard pen. So I have to translate what is in Germany. But I'm absolutely sure that you're the chosen one. If you follow the traits, if you follow the rules, and if you are willing to the want, thank you very much. The want, this is the want. And if you follow the rules of personal development. So, all financial traders commonly seek a profit by speculating on the changing value of an instrument, such as the share price of a company or the worth of a commodity. I want to show you what's interesting, really interesting word. Maybe you will hear it the first time. And no, here we go. There we go. I want to talk to you a special word. You see this special word, speculating. So this term speculating, uh, the main word is speculation. So what does it mean? Is it a kind of gambling? No, it's not. Um, Speculating has its root word in the Latinum word speculare. And speculare means not gambling. The literally translation of speculare means observing, looking around, watching things, not action, no actionism, no gambling. The real word speculating means keep calm, observe your surrounding, observe what's happening right now, and afterwards then make your decision. But speculating is just observing, looking around what's happened, and then you can make a decision if you know everything about that. So this is the root word of speculating. So with this is especially in Forex the same. We are looking around. We observing our surrounding and environment, and then we can see what happened. And if we know the point when you know everything, rules, environment, surrounding, and anything else, then we can make a decision. Keep calm. This is the most, yeah, let's exercise. Claudia, welcome and lovely greetings to Bolivia, Colombia, Colombia, I guess Colombia was. Okay, yeah, like a safari. On the safari, you are in the car, Colombia, Medellin. Yeah, great. Um, then you are observing, you're watching around. This is the point. And then you will see the best things if you are quiet. Only if you're quiet, then you can focus on the real, on the most important things. And this is in trading exactly the same. No gambling, no hurry, no rush. Just keep calm, watching, observing. This is the root word or the literal meaning of um, this kind of speculating. No, watch the elephants. Yeah, Ronald says, we scare the elephants by making too much noise. Really seldom. If you watch elephants, elephants most of the times are really calm. They're too big to move too fast. If they are in panic, yes, then they are really running. But this is an extremely seldom case. Elephants are really quietly, they're really calm, and they are moving very slowly to the water hole, drinking there, and then they go back. Seldom case that elephants are really noisy, very seldom case. That's the point, and this is the interesting thing why you can follow them. But for that, you have to be quiet as well. Watching, observing. This is the most important thing. So where Forex trading differs slightly is that you are speculating again on the value of one currency relative to the value of another. Speculating, you see, again, watching, observing, looking around, that you can make the difference between one currency and the others. In the word speculating is not included the word opinion. I have an opinion to the euro or to the euro or Japanese yen. No, speculating means watching, not having an opinion. Oh, I think euro must be slightly. I think US dollar must be strengthened right now. Speculating never means having an opinion, just watching, thinking about the facts. We want to dive into the deeper knowledge of trading. So when the two currencies involved are grouped and valued against each other, they're known as a currency pair. You can never trade only euro. You can never trade only USD. You can never trade only Japanese yen. You always trade a pair, which means if you want to buy euro, you have to sell the foreign pair, the foreign currency. They always belong together. They always belong together. If you have any questions, type it in the chat box. We can talk about almost everything. Okay? So, and this relative value is expressed as how many units the first currency is worth in relation to the second currency. So if you're watching the US dollar and the US dollar is being valued against the Japanese yen, and you see the exchange rate was 113.00, it would mean that $1 was worth 113 yen. So the first named currency is always the main currency, or we say the home currency, and the second one is the foreign currency. So the base and the foreign currency, different words. So there is no ultimate truth. It's just only your perception, but you can remind it, and you can think about the first one is the base, the second one is the foreign exchange. So if you have $1, Japanese yen 113, then for $1 you will get 113 Japanese yen. And that's really it's really that simple. And arguably, the best way to start trading currency and gain an initial understanding of them is to try them out of a demo account, of course. Before you start with trading, please, in God's sake, please start on a demo account. Not too long, not 1 year. I suggest to my people, if someone is getting a coaching from me, then the first maybe 2 months are never allowed to trade in real. First, you have to get deep knowledge, basic education. And then if you know that, then we can jump and we can sliding slowly into real trading. But before you don't know everything about what you want to do there, please try it on a demo account at Admiral Markets. Why is it? You avoid to risk your capital, as you can trade in a risk-free trading environment with virtual funds until you are ready to transition to a live account. And if we talk to each other very frankly and open, then you must confess that you will never open a business without having any clue of it, without having education. You will never go to a lawyer if you don't know he has a big education. It makes no sense. Or would you take a flight, or if you would take a plane or aircraft, as long as you don't know if the pilot has education? It is not enough that the pilot, the captain, has watched a webinar last week, and now he can say, "Oh, come in, we fly to Asia right now." No one would do that, and we wouldn't expect that. Yes, so you would never open a business without any kind of education. And I would suggest you would do the same in trading. Before you start, open a demo account, learn trading, and then go and trade in real. Okay, how we can read those currency pairs. Let's look at an example how we can learn to read currency pairs. So if you were to look at live Forex prices on a trading platform, I will show right now, you would see a wide variety of Forex currency pairs listed. So, and every currency has a 3-letter ISO. ISO is the shortcut of International Organization for Standardization. It's a symbol and they are fairly straightforward. So for example, GBP is British pound or British sterling. USD is US dollar. JBY is Japanese yen. And CHF is Swiss franc. And EUR is euro, of course. So always 3. So you can never mix them. If you see GBP, okay, you know that's British pound. If you read JPY, it's Japanese yen. So, and if you see NSD, NZD, it's New Zealand dollar. If you see AUD, it's Australian dollar. So it's really simple. The currency pair you are therefore interested in is, for example, Euro versus USD. And in bracket, you can see Euro USD, EUR against USD. To the right of the symbols for the currency pairs, there are rates at which you are able to trade. The bid is the rate that you are able to sell a currency pair at, and the ask is the rate at which you are able to buy. So you see, bid, you want to give, you want to sell, and ask means you are asking for something. You want to have, which means I want to buy. And if you bid, means you will give, you will sell it. So bid and ask. Or we say sell and buy, or bid and offer. So you see, that's really simple. And the difference between the two prices is known as the market spreads. Spread is like a gap between these two. Okay, let's see. Here we go. So let's see, let's open Euro USD. Here we go. So here you can see right now, that's Euro USD. Actually, for 1 euro, you will get $1.2190 dollar cent. And you see there's a difference between 91.3, 92.1. You see it's changed really quickly. So you see, and the difference between bid and ask, which supply and demand, this is the spread. between that. That's the earning of the market, so we can say. So you see, it's really easy. Okay. Now let's suppose that you think the euro will weaken. Just an opinion. Just never think in that way, of course, but this is the theory. And maybe you think the dollar will strengthen. Then you will likely want to sell the euro and you buy the US dollar. So here we go, we come to an interesting point. Maybe you follow me a couple of weeks right now, then you know I have a special attitude and a special way of thinking about trading. Basically, the market doesn't know you at all. We have around about 15 million private traders around the world, 15 million, and we are one of them. And aside of them, we have million and million of pro traders, employees of banks, offices, family offices, hedge funds, etc., etc., etc. So basically, we have millions of traders around the world, and you and me, we are one of those, but we are not interested. And if you think about the account size of Warren Buffett or Bill Gates or George Soros, or maybe of a security, or maybe of a government, or maybe of a central bank of a special country, then you know our accounts really, 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 really small. You are not interested from the market. The market does know you. So, as if you want to become a successful trader, stop having an opinion. Your opinion isn't interesting about the market because you cannot force the market to follow your opinion. You can compare it maybe if you have your own company. So if you are the boss and you have employees, then it's fine that you have an opinion because you can go to your employees, you can say, guys, this is my opinion, you have to do that, follow my rules. But in the market, especially in Forex market, we have a traded value or maybe a traded volume every day of almost $6 billion every damaged day. So you see the market doesn't know you. So please avoid having an opinion. Next point. If you want to sell something, you know what will come right now? If you want to sell something, what do you need for that? Type in the chat box. If you want to sell something, what do you need on the other side? Type in the chat box. What do you need? If you want to sell something, what do you need on the other side? You know, it's a market. Market means buying, selling. What do you need on the other side if you want to sell something? Yeah, I'm really proud of you guys. You're really right. Of course, you need a buyer. So, and now, again, you are sitting in front of your PC, of your screen, and you, among of million and million of traders, you're sitting in front of your screen, and you are watching Euro USD. You are alone with your opinion. It's your perception, only yours. You can never know what your neighbor will think about this currency, or a trader in an asset management, or maybe me. Maybe Claudia is sitting in Medellin, of course, for example, and maybe by an accident, we're sitting both at the same time in front of the screen, Claudia, and both of us, we are watching, of course, Euro USD. Claudia will never know what I'm thinking about unless she's calling me. So Claudia, call me, then I will know it. So she will never know what I'm thinking. So we have our own perception, because I don't know what time frame is Claudia watching in Medellin right now, while I'm sitting here in Bavarians in Germany, far, unfortunately, too far away from Claudia right now. But you see, that's two of us, but we have million and million of traders. And maybe Claudia will think, okay, I'm going long in euro. And maybe she has rules, and maybe she will follow the rules. And she's thinking, okay, that's correct what I'm doing there. But at the same time, I'm sitting here and I'm watching Euro USD as well. And I have different rules. And as sure Claudia is that she is doing the right thing with Euro USD and she will buy Euro, I am absolutely sure on the other side that I am right with my rules with selling Euro. You see, if Claudia want to buy Euro, then she have to sell USD. Everything always, if you want to sell something or to buy something, you need the opposition on the other side, buyers or sellers. Okay. Yeah, because it's not the money of my country. Doesn't matter. So you can trade Euro USD as well. But I try to explain, and I love to talk to you. So, that's the understanding is a little bit better. I bought because at the support at 121.750. Ronald, this is very interesting. This is really interesting. Let me repeat. Ronald says he bought because of the support at 121.750. Without watching the chart right now. This is your private perception of the market. And maybe you will think it's right. But how can you know what millions of other traders will think about it? How can you be sure that this special support is watching by other traders as well? And think about it. If you want to buy euro, you need someone who wants to sell US dollar. And both of you have a special reason for that. So you see, maybe it is based on rules. And it's a kind of human psychology. That's true. But this is the big danger in trading. That you, listen to the expression, you think it's a support. How can you be sure that other people think the same? You can never be sure because it's coming from you. It's just your opinion in this time frame. In another time frame, no one can see this support. And here we go to talk about the problem of probabilities. No, and support is never seen in all time frames. That's wrong, sorry, but this is absolutely wrong. And by the way, here is the perfect argument. Everything in trading starts where? Where is the beginning and the end of every kind of trading? Where is it? Can you type in the chat box? If you want to buy or sell something, you open your display, you type in and you send it. Yeah, you send it to where? Where is it? You want to buy and you need a seller. Where starts everything and where ends everything? Ronald, you're right, but I want to hear it from the other guys. Oh, that takes too long, guys. This answer takes too long. Where does everything starts and ends? Okay, I can show you. Here, right side, that's the order book. And especially in Forex market. So you see that, guys, on the right side is the beginning and the end of every kind of trading. So back to Ronald. Now, please show me in the order book your support. Show me. Show me your support in the order book. I know it's bad. I know I'm a really bad guy right now. But this is how I train my clients in coaching. Show me in the order book your support and give me the reason why you want to go long. Show me. You cannot. Why? There doesn't exist a support in the order book because you only have 3 columns: buyers, sellers, price. There is no time frame. Why should you see there a support? Think it through. You can see it because you open 4-hourly charts or maybe our hourly chart or whatever. You can see it. But this is not an ultimate truth. Never believe it. Never believe it. And I guess we should talk about next year a special point about maybe about the point probabilities. So let's see. Yeah, look at the chart. I know the chart. Believe me, I know the chart. Okay, let's open the chart. Come on. It's really interesting. Open the chart. Show. Here we go. So you open at 121. So yeah, I know. I think you see, you mean this one. You think this one. This is your support maybe. I can see it too. But show me this support in the order book. So it doesn't exist. So if I go down to 1 minute, so show me this support. There isn't a support. It's just what you see in your time frame, what is on your screen right now. Therefore, you need rules. Maybe if you made a back test and you create rules based on this back test and you see, okay, it's profitable, then it's fine. But if you trade only because you think this is a support, then you will have really big problems in the future. So, and the next one, maybe this is fine. So what's the plan beyond the rules? How far will you trail? How far will the price will go on? So I only explain that you can see it's your perception. If someone else around the world open the chart, maybe in daily chart, he cannot see this support, or maybe in weekly chart, there is no support at 121. There is no support. Or maybe I open in 5-minute chart. There is no support I can see. Only in your hourly chart, or maybe in hourly chart. Yeah, maybe there you can see this kind of support. But I want to explain with that. Everything starts and ends in a book map, in the order book. So please be careful with such things like I see and support. Yes, you see the support, But you are not alone in the market. And never forget the elephants. And as long as the elephants won't go with you, it's always dangerous. And elephants, by the way, no, you are wrong. Of course, sorry, you are wrong. The elephants open orders. You know an elephant? I know those guys. I know it. Should I tell you something? They don't trade with supports. They don't trade with supports. They create supports, yes, but they trade movements and trends, but not supports or resists. You're thinking, sorry for that? I don't. Maybe your experience. I'm sure you are. They open at prices they want. Yeah, exactly. But not they want. Think about it. If you have huge accounts, Ronald, think about this point. If you have really huge account, millions of dollars, millions of that, then you can imagine you cannot jump into the market by one price, because you need a seller or a buyer on the other side. So the elephants, the big money, has to go slowly in and slowly out. They will never work with supports. They work with movement and trends. But this is another topic. It's too deep right now. But the message, please stop thinking that way, that what you see is an ultimate truth. It's just your perception. It's a very deceptive truth. It's a really tricky truth. Never rely to that. Just beside. So here we go. Let's go on to our topic. So, but the message is between if you want to sell or if you want to buy something, you need on the otherwise you need the opposite directions. Okay. The elephants need the other. Yeah, that's Claudia. That's right. And here we go. We have the difference between smart money, and smart money is intelligent money. They know what they're doing, and they work with the so-called dump money. And I would replace the words from experienced money to unexperienced money, or work without emotions, working with emotions. This is the problem. And therefore, the elephants need the smaller animals, of course, because they are always in fear or in greeds or in regrets or in hope. And the elephants, they do what they want. They make money, but they need the unexperienced traders. So now you have the choice to be one of those or one of those. But if you want to be one of the elephants, not by having this account size, but having this kind of thinking, you have to switch the sides. And for that, you need a teacher. For that, you need experience. For that, you need education. This is not made by one webinar or webinar series or something else. Believe me, every elephant has a great teacher or had a great teacher. So remember, guys, a currency pair expresses how much one currency is worth relative to another currency. So the price quoted for the currency pair is the number of dollars per euro. So if you're right, maybe, and the euro weakens, 1 euro will be worth fewer US dollars. Or in other words, we can say the exchange rate will have gone down. So you would be selling Euro USD in the hopes that the rate goes down, and the rate you deal at would be the bid price of 110.36, of course. So you always deal at the bid if you are selling the first named currency, and at the ask if you're buying the first named currency. So to reiterate, you sell if you think an exchange rate will go lower, and you buy it if you expect it to rise. And again, by the way, please stop having an opinion. The market is too big and the market doesn't know you. So you cannot have an influence to the market. Therefore, it is not okay having an opinion. You have to use other words. Yes, you can have an opinion, but the market isn't interested on your opinion. And you cannot force the market to do what is your opinion. As a result, you have to follow special rules, and rules are based on a strategy. So you need to have a strategy. If you don't have a strategy, you will never become successful on a long run. So trading by support or resist is an interesting idea, but only if you made a back test, or maybe you tested it in real, that you can count or that you can figure out how often occurs this signal. It's a question of probabilities. And that's next, which plan is beyond of that? What will you do if you have an open trade right now? If you trail your stop, where is the target? All these things. Only trading by, oh, I see a support and it will open a trade there. Maybe this could work this one time. But as long as you cannot have a, how should I say, a back test, or maybe any kind of evaluation, that's the right word, you will never know if this will work on the long run. And only a long run will help you to create gain and big results in trading. But just it's my private opinion, and I have a little bit experience in market. Okay, let's talk about liquidity in trading major currency pairs. So the Forex market basically is, oh Jesus Christ, is the most liquid market in the world. Yet just a handful of currencies make up at the vast majority of the market. So regarding liquidity, it's worth reminding ourselves that the larger the trade value between two countries, the more liquid the currency pair of these countries will be. Not yet. We have Christmas, of course. The huge traders are in Christmas right now. So, but basically, all the other times in the year, Euro USD, the most liquid currency pair in the Forex market, and the most popular currency pair are known as the majors. So, it's not, there doesn't exist a formal list, but that's the major, basically the named major currencies. Aussie USD, Euro USD, GBP USD, USD Canadian dollar, USD Swiss franc, and USD Japanese yen. That's the so-called major pairs. And of course, unsurprisingly, it's the currencies from the world's largest economies that comprise these Forex major pairs. The vast amounts of trading goods and services conducted with the nations involved is one of the reasons behind the currencies being traded so extensively. Maybe another reason is the political and economic stability based on history with these currencies. It boosts their appeal, especially in times of economy uncertainty. And you could watch it the last weeks in British pounds. So on one weekend, we have good news. They will continue with the negotiations next year, even we have a hard Brexit deal at the end of this year, with good news. So the British pound jumped up 2 weeks ago. Last weekend, we got bad news because we have a mutation of the virus on the British islands. We have bad negotiations. We get a hard Brexit deal, which means bad news for British pound, which means on Monday, we had a gap down in British pound. So you see, it's a really uncertainty economy at the moment, which means we have high volatility in the market. And by the way, US dollar is particularly popular because it's supported by its status of the reserve currency of choice for central banks around the world and many key commodities. Every commodity is counted in USD: oil, wheat, natural gas, soya beans, coffee, cacao, whatever. It's all, everything is paid in dollars. And this necessitates the currency's usage for such transactions. US dollar is always around of us. And after US dollar, euro is the most commonly held currency by the institutions and governments alike. So we have some benefits and cons, of course. Maybe you will find that news regarding these Forex pairs is more readily available. We have a lot of news around the day, from the morning till the evening, always news about every kind of currency. Meanwhile, there are regular economic updates for the underlying economies. We have economy data Monday, Tuesday, Wednesday, Thursday, Friday, and sometimes on a weekend, which are closely followed in the market and therefore provide opportunities for sharp price movements in time junctures that you can anticipate. So again, let's check it in British pound, for example. So British pound USD, for example. So you see 2 weeks ago, we had good news and the price of British pound jumped up, and we had bad news and the price were sharply decreasing to the lower side. So you see, it's based on news. That's the cons of that. One potential con of trading in the Forex market is the inability to receive the type of regular, reliable, and fixed returns you can usually expect to receive with other types of investments, such as stocks or bonds. This all depends on your personal outlook, your perception again. And for some traders, Forex simply doesn't provide enough value for the risk involved, but for others, the short-term nature of the market allows for traders to potentially earn a lot or maybe lose a lot in a short space of time. And here we go. It's again your private opinion and your private perception. In my private opinion, a good way to start trading Forex is to start with what you know. And if you have insight or familiarity into a particular economy, you may naturally feel inclined to trade its currency, even if that means trading a pair that is not one of the majors. Be careful with trading exotics. I trade exotics, but just only in weekly charts. Major and minor pairs, I only trade in 4-hourly charts and sometimes in daily charts. The benefits are tighter dealing spreads, together with a greater availability of economy news and Forex analytics, which mean that the major currency pairs are a good way for many people to begin exploring the Forex market. So we can make yeah, I hope as well that everybody understand my words, because it's kind of message, of course. So let's make a quick conclusion. If you want to learn about trading Forex online, you have to learn about currency pairs first. And you always deal with bid and ask. So think about it. If you want to buy something, you need someone who wants to sell something. It's always the same. And as sure you are right. The other one or the other side is also sure he or she is right. So always think about it. It's a kind of perception. And think about the pen. You see, this is kind of pen. Maybe this is a pen. And maybe you see, okay, this is a pen. And this is my Christmas gift for you. Not the pen, but the thinking about it. This is a pen, guys. But if a dog, puppy dog comes in and I will show the puppy dog this thing. What will the puppy dog do with this thing? He will never write a letter with this thing. He will bite on it. And the dog will mean, okay, this is a chew toy. You see, who is right? Who is right? The man, the human, or the dog? Okay, you will see both are right. For the human, it's a pen. For the dog, it's a chew toy. And for an elephant, it's a chew toy. Or it's a game toy as well. But for an elephant, as well, by the way, it's not a pen. So you see, it's a kind of perception. And if I take the pen there, and no one is in, take your dog and go out, and no one is in, what is this thing in this moment? Then you will see, I don't know, nothing. Yeah, that's right. That's the concept of emptiness. Then it's nothing, guys. And if a human comes in and see this thing, then we'll see, oh, okay, it's a pen. But if the dog comes in and will see the thing, okay, we'll say, okay, it's a chew toy. So you see, everything is a kind of perception, and basically it's empty. The same is with the chart. On the right side of the chart, what you see is your perception. The next one will see different things. If you think it's going long, the next one is watching the chart. He's thinking, oh no, I'm going short. That's the basic of trading. But there is no right or false. There is only just following your rules. Never be sure that your perception is right. And this is a kind of karmic management, of karmic cause and action. And maybe you will think about during Christmas right now. We have different Christmas this year. We are very close to our family. We have in lockdown in Germany and a lot of countries as well. So it's a really quiet Christmas this year. Yeah. And next time, think about it. Next time, if you sit among your family, maybe on Christmas, and someone is yelling to you, be quiet. It's your perception. It's the seed you planted 1 week ago or 2 weeks ago when you were yelling at another one. It's your perception. And if you want to plant the right seeds for the future, be quiet. Move away, go to the restroom, and say to yourself, okay, fine, it's my perception. And then go back, and you will see something will change. Try it. And think about the pen, guys. This is my Christmas gift for you. It's deep, deep knowledge. Guys, I wish you all the best. And of course, I want to invite you to Trading Spotlight community, and there we'll talk about all our trades. And on Friday, next time is, next Monday. Not Friday, Monday, Paul is talking about 2021. How can you make the best trading year ever on Monday, 28? And we will see each other next week. And next week, Wednesday, is a special day. It's my birthday, next Wednesday. And I will share my birthday with you guys next Wednesday with the next webinar about, I don't know the topic right now. We will see. We'll see. Okay, guys, I want to say thank you. Thank you for your time. Thanks for sharing your lifetime with me. Thanks to Admiral Market that we can do that here every day. Guys, I wish you Merry, Merry Christmas, a calm and peaceful Christmas, and lovely Christmas days afterwards. And maybe please think about the pen, be quiet, and think about it's your perception. And please plant the right seeds for your own future. And then we can have a great, great common future together. Guys, Merry Christmas, and we'll see each other next week. See you. Bye-bye.